It's not a secret that the stock market today is extremely overvalued. The S&P 500 has a PE ratio of 44, while a normal valuation is usually around 15. And some of the stocks are at even higher valuations. For example, Tesla has a PE ratio of 600, even though the stock already dropped 30% from its all-time high. So it might seem attractive to short these stocks because frankly it feels like these stocks can't go any higher from here. So what is shorting or short selling? Short selling is when we speculate on the falling of the stock prices and earn money on it. When we short a stock, we borrow it with the plan of buying it back at a lower price. So when we short a stock, we make money when the stock price falls. But the downside is that if we are wrong and the stock price goes even higher, we lose money. And you can lose much more money if it goes wrong. So shorting a stock is not really investing, it's speculation. Right now, everything looks expensive. Stocks are at extreme high valuations. So you might think it would be a good idea to short these stocks because they will probably fall. But let me tell you why it is not a good idea. Stocks can be overvalued for long periods of time. In fact, overvalued stocks are more common. It's much easier to find overvalued stocks than undervalued stocks. Everyone wants to make money, so it's a very common thing that investors pump too much money into a stock, bringing up the price to high valuations. And popular stocks can stay at those high valuations for a long time. For example, Tesla never had a lower valuation than 500 PE for the past 5 years. So if a stock is at a high valuation, it doesn't mean that it will drop anytime soon. Another thing is, when a stock is at a high valuation, it doesn't mean that it can't go even higher. This year, Tesla had a PE ratio of more than 1000. So shorting a stock is very risky because even if a stock has a high valuation, it can still double in price and you can lose a lot of money. When you buy a stock as a long-term investor, for example, you invest $1,000 in a stock, the maximum amount of money you can lose is $1,000. This is the worst case scenario. But when you short a stock, there is no limit on the money you can lose. You can lose much more money than what you have. This is why I don't recommend shorting stocks. It's not investing but speculation, and you are taking an unnecessary risk with it. It's much safer to invest in businesses for the long term because we can predict the growth of a business with a much higher certainty.